Hey guys, we are looking at swing volume profile indicator version 1.04. With this version, you can plot volume on the swing. Here it is set to true and it's plotting 20 volume profiles to the back, to the past history, and the volume resolution is 200. Also, it is plotting the volume profile from right to left. You can set it to false if you would like to plot it from left to right. With this new feature, you can also click on to disable to close, double click on the channel to plot the volume or to hide the volume. You can double click. There is a channel here, right? There's a swing high channel and swing low channel. If you click somewhere between that, it will appear a volume profile from this swing high to this swing low. If you click outside, it won't do the action. Okay, here I clicked on the red channel, right? In the red channel area, it will plot the swing volume profile from swing high to swing low. I can disable it. If I click the green, inside the green channel, it will plot the swing volume profile from swing low to swing high. Also, another new feature is that you can auto plot volume profile when a new trend line is created. Okay, so this is like a flexible volume profile. I can click it from here. I can move it around. Let's disable the volume profile first and disable double click. There, the volume profile is keeps updating live. If I move it, it will be updated. I can duplicate it too. There. And also here, notice that in this flexible volume profile, in the value area, colored in pink, there in the middle, inside the value area, you will find a POC, point of control, and this is the value area high, value area low. There are two lines above and below the POC, as you can see in the screen. And for the volume profile, the light blue color indicates a low volume, and blue color indicates a high volume, and a pink color indicates a value area and a high volume area. And what else? Another new feature is that you will find fair value gap here. Box color is a fair value gap. This box icon, this is a fair value gap, as you can see here. This is like a institutional candle where it spiked high and it lifts the previous high of the candle and the next candle low. There's a gap between it. It doesn't overlap. Okay, here let me connect this one. It doesn't overlap. Unlike many candle right here, for example, it overlaps, right? So that is not a fair value gap. Here, this one is a fair value gap because the previous candle's low and the next candle's high doesn't overlap. If you would like to manually plot the volume profile, you can disable that. And if you would like to draw it manually, you just have to rename it to VF. VF, it has to contain VF, all right? Meaning volume flexible. And then you put any identity after VF, and then voila, you have your volume profile. And then you can do also for Fibonacci too. For Fibonacci, let's say this one, you rename it VF FB. And you can have as many as you want. Also, you can plot, let's say 200 of this, and you have to know that the higher number may slow down your PC. So let's try reduce this to 50, the volume resolution. Okay, wait, I forgot to plot the volume. Set to true. There, now we have 200 volume profile. And if in case you're asking, what is this channel? This is a swing channel. This is a external swing high, external swing low. The color indicates the trend. Red for bearish, green for bullish. You can take this as a key swing high or key swing key level support or key level resistance. Okay, this is a key level support. The price broke the key level support, and notice the color changed. So this is like a change of character. Let's say we have a prolonged bearish trend. We have a change of character from bearish to green, from bullish to bearish, and then we have a break of structure, break of the key support area, key support level broken again, and then we had and then here, let me draw, and then here we have a change of character, and then follow with a correction, break of structure, correction, break of structure, correction, break of structure, correction, and so on, break of structure, and we have a change of character here, correction, change, break of structure, correction, fail to make a swing low, change of character, right? And then we have a break of structure. And then here, fail to make a swing high. Instead, it made a change of character, correction, break of structure, correction, fail to make a swing low, change of character, and then change of character, right? Here, change of character, bullish change of character, and then follow with bearish change of character because it failed to make a swing high, a break of structure of the key level resistance, but here it broke the key level support, change of character, and then here we have a break, we have a correction, break of structure, correction, break of structure, correction, break of structure, correction, break of structure, correction, fail to break the swing low, right? This is the swing low or the key level support, and it broke the key level resistance here. Okay, and here notice here also when there is a correction, you will often see this a wick above the swing high. So this is like a liquidity grab. Okay, this is a liquidity grab. Because here, not here, notice for liquidity grab, this is a bonus inside. Okay, here this is a liquidity grab. Okay, this is a liquidity grab, and then this is a liquidity grab. Here, let's plot a this VF, let's say 555. Okay, here. Okay, here from this swing low, you see this is a break, change of character, break of structure, right? We can plot from this swing low, swing high to this swing low. Here notice low volume area right here, right? And here we have a key, we have a point of control. The price went above where there is a low volume right here. This is the low volume node. Okay, sorry guys, so where were we? Okay, right here. Okay, I plotted from this swing high from here before it had a break of structure. Actually, we don't need this yet. Here, you see this is there is a FVG, right? Here, because FVG fair value gap appears when there is a low volume, there is an imbalance. Okay, price often goes to find a resistance and support at the low volume area, low volume node. Let me give you some example. Wait, let's make this draw automatically. Okay, excuse me guys, I'm sorry. Okay, let's plot this automatically. Let's say from here to here. Here, notice the price react when it went inside the low volume area. It swept all the liquidity in the low volume area, and it swept here again. It swept, and after it sweeps all the low nodes, all the low volume profile here, from here to here, it corrected. Let's delete this. Let us go through some more example. Okay, here, notice here. This line here. You see? It touched the low liquidity zone and it's corrected. And then it went back to the high volume node. And then here again, it touches that. It sweep all of this until here, right? And then it went back to the highest node cluster here. Let's maybe draw a square. Okay, this is a high volume node cluster, right? And then after that, it went inside this. This is used to be a value zone, okay, a value area. This particular area here, this, okay. Not pay attention to this. When we plot from here to here on the 21st of March, this used to be a value area. Okay, this used to be a value area. Now we go to the future, the value area, and pay attention to the point POC, the point of control, move higher. Okay, so the price went back to test the value area, and notice it touches the low volume area, and then it went back above it. Okay, it went back above it and broke above the swing high, the key level resistance. And then if we plot this, if we plot this from here to here, this is a low volume area. Okay, we already gone over that one. Okay, let's go over the fair value gap where it appears. Let's start from here. Here, let's say this is what we have. Let's say we don't have the future price. Okay, here notice the fair value gap. It appears in the low node volume profile. Okay, it appears there, and same here, you see. And then the price try to fill the gap, the low volume. It start to get thicker and thicker, and then eventually here we have we're starting to have a cluster, a volume cluster. All right, and you have to notice also with the point of interest, they going higher. Here, let's say you pay attention to this here. It was here, right? It was there, and it will increase above it. Okay. Okay, now it's going up. From here now on, we can confirm that we are bullish, because sometimes you need more than you can rely on this thing, but if you are not sure, you can rely on the volume profile. You can rely on how the POC and the value area move. If they move higher, it indicates bullish. Okay. Okay, here we're bearish. Okay, next is this. Here we have a liquidity grab. This is a liquidity grab. Oops. Okay, I'm sorry. This is a liquidity grab. Why? Why it is a liquidity grab? Because here it grabbed the low volume node. It grabbed the where it visited the low volume node. There is a resistance in the low volume node, and it will be very clear sign that it's a bearish when it breaks below. So you have to visit this first, the low volume node, and it has to break the POC. Then we can confirm that we are bearish. We continue move lower. Also, this should be red color. The swing high and swing low channel. Let's go look for another example. Oh, we are still in Euro USD. Let's go to gold. Okay, let's go with gold. Let's set the setting. Okay, looks good. Okay, here we have a liquidity grab. Here, this is a liquidity grab, right? Liquidity grab. Here also liquidity grab, right? The price went inside, went below the POC, and it grabbed some liquidity above it. It grabbed liquidity above it, went below the POC here, and price continue break the break of structure, and this thing is still red, the swing channel high. And maybe if we go to a lower time frame, we could see more liquidity grab. Okay, this is a high value node, right? Here. Okay, this is high value node, right? This high value node. The price went above it, grab a liquidity over here, right? Notice the color is light green, turquoise color, and then the price went below the low of this volume cluster. Let's put a middle over here, and then price break of structure. And here, maybe here, you will find here the price, there is imbalance. Here we have imbalance. Okay, we have FEG in red box color. FEG, fair value gap. The volume is thin. It had low value node, and price went back inside. It tried to grab liquidity from the value area. Okay, it got rejected, and notice the color is green, right? The color is green, and change of character over here. Let's do another example. Here we have so much bearish example. Let's look for a bullish. Okay, here the price, this is the high value node. Okay, because the color is blue, right? Blue, and the price went lower to the low volume node, colored in light blue, light green, light blue, turquoise color, and then price went back inside the high value nodes, and we have a break of structure here. We have a break of structure here, and then price corrected, and then we have another break of structure. We have another break of structure, correction, break of structure, correction, break of structure, change of character, correction, change of character, bearish change of character, right? Bearish break of structure, and another last bearish break of structure, and then we have a change of character, break of structure, break of structure, break of structure, price distributed over here. Okay, let's see the volume profile somewhere from here to here. From here to here. Okay, notice here the price went back inside the value node, right? The value area. And notice here, it did a liquidity grab here. Okay, here, liquidity grab. And the price went back above the POC and above this. Okay, I'm sorry. So the market corrected from here. It touched the POC. It reacted, went back above it, and then it grabbed liquidity. The area below the low of the value area, where there is a low value node over here. The market reacted again and went back above the value area higher, and you can start buying here. If you notice this, if you notice a liquidity grab here. Okay, what I'm telling you, this is a trend continuation. Of course, you have to the market has to be bullish, meaning this color should be green for bullish for this example. In this example, and we see a break of structure. Okay, let's go. Let's do another one. From here to here. Okay, this is interesting. Here again, this is we have a value area right here. We had a value area. Let's make it pink. Okay. Okay, the price touched the low liquidity area, and it tried to go back to the value area and got rejected. Okay, and now it tried to go make lower, find a liquidity, and notice here I drew this from here to here, right? And if you look to the left, we have a low value. We have several bullish fair value gap, and remember, fair value gap appears when there is an imbalance. There's a low liquidity right here. Why there is low liquidity? So there are market maker and market taker, right? Market maker, you provide liquidity using limit order. Market taker is like you as a trader, you use a market order, and when you place, let's say, a buy market order, you will fill all the sell limit order, all the limit order that is provided by the liquidity provider. So market taker meaning you take the liquidity out. Okay, liquidity provider meaning you provide the liquidity in using limit order. Okay, here there were aggressive traders right here. It caused imbalance because there were a few stocks, few limit orders, and these aggressive traders, it take out all the limit orders, and the price become imbalanced to the upside, and then it tried to look for a value area, and looks like this is where the value becomes balanced. And if we plot from this swing high to the previous swing high, swing low, from this swing low, there you see here, You see how this is related to this low value node? Because there is imbalance, there is low volume right here, and the market tried to fill all the low liquidity right here. Okay, and then we found buyers, we found support right here where there is a low liquidity. Okay, we found interest buyers, and that drove the price higher above the value area right here, the recent value area. Okay, now we have a complete trend maybe, and the price try to here the price went below, it did liquidity grab over here, right? Again, liquidity grab over here. Let me draw let's draw a square. You see here, there. You see it corresponding to this particular node. It corresponds to that particular node. Okay, from here to here, there. And then the market went to where there was a high volume node here. There is a resistance here. Okay, this is a resistance. And the market reacted. It took again the low volume area, and if we move this little bit closer, there you go, this becomes the new value area. Okay, and they found resistance below the POC, below the point of control. And then the market tried to do liquidity grab again, find liquidity like right here. Let's see where it corresponds to. Corresponds to this particular node, very low node. Okay, low value node. There is a support, and it managed to break above the swing high, the external swing high. Also notice that this bearish imbalance candle, fair value gap, it appears inside the low value node. Okay, same like here, same here. It appears inside, near or inside the low value node. When the bearish FEG appears inside this value area, it becomes it doesn't become very trustworthy. Okay, this could become this could indicate a sign of weakness in the bullish, in the bearish trend. And then let's go, it moved higher. Let's plot this from the new swing low. Let's say from here. Okay, pay attention to this bullish FVG candle. It appears in the low value node. Okay, and then the price just reversed sharply, very sharp, and it broke all the swing low here. The key level, it broke two key level supports, one here and one here. Okay, it broke two key level supports. Let me draw that, right, one here and one here. It broke two key level supports. That is very bearish. All right, guys. And here you see, notice this is a weak bullish because it broke only one. It didn't broke two. And this one as well, it broke only one here, and this one is still intact. Okay, here it broke one and it broke two, and it stays above it. Okay, it stays above this. That indicates bullish trend. So what I'm saying is that change of character alone is not enough. Okay, here we have a change of character, right? And we have a break of structure. That basically that is enough already. Okay, that is enough. So if you want to have a confirmation in a changing trend, first you must have a change of character, follow with a break of structure. But to be strong, it has to be stronger. It has to break two previous bearish swing high here. Okay, let's make another example. Here. We have a change of character, right? But it doesn't broke above this. And created a new low. Okay, and then here we have broken above it, right? But it couldn't manage to close above this high. Okay, the price maintained below this swing high, and then here again it broke above it, and it couldn't again maintain below this swing high. It cannot maintain the strength position above it. Okay, so this is a very strong support, and here you can consider this as a liquidity grab. I'm sorry, here this is a liquidity grab. Okay, that is a liquidity grab. Because here notice we have a FEG, right? Where there is a low volume node right here. There was a low volume node. This big move because there was imbalance. All the liquidity, there were aggressive traders that took out all the buy limit liquidity. Okay. There were traders that sold their assets, sold their currency or gold or whatever, their security. They executed the sell market order and took out all the buy limit orders. And that caused the price to drop. And then the market tried to make it balance. Okay, here. By doing the liquidity sweep, by doing a liquidity grab. Okay, let's plot this. Let's see. Okay, as you can see here, This is where the low liquidity it touched. Same with this. Okay, it went inside the low liquidity zone, the light green color. Okay, let's go with this example. Let's see here. Okay, notice we have a fair value gap right here. Okay, because it is not plotted here, the fair value gap, the icon, because the trend is bullish. If the trend is bullish, it only shows bullish fair value gap. If the trend is bearish, it only shows bearish fair value gaps. So you must know how fair value gap appears. Basically, it is where the low and the high of the first and the third candle, let's say like this, and then we have a wick. This wick must not touch it. This candle number 1, candle number 2. Okay, I'm sorry, candle number 1, candle number 2, candle number 3. The wick of the candle number 1, this must not touches the wick of candle number 3. Okay, you see it doesn't touch. There is a gap. There's a gap. Okay, there's a gap here. And the candle number 2, it must close above the high of candle number 3. So here, okay, so here this is a fair value gap. Here this is a fair value gap. Okay, here notice the high of this candle, at the low of this candle and the high of this candle, it doesn't touch, doesn't cross, right? There's a gap between them. And same here, there is a gap. And with volume profile, with the volume profile, you can have you can have more clarity. Okay, this is low volume area. Okay, this is a low volume area here, notice. Notice this is a low volume area. And the price visited this FVG and it got rejected. It went below the POC and then it went below the low value area and it broke below the swing low. And then you can start short the market. And we have another imbalance here. And then the market, when it's corrected, it visited this imbalance where there is a low liquidity, there is a resistance, meaning there are willing traders who are interested to sell the security, the asset. And here again we have imbalance. The market corrected. We have strong interest to short the market. Here, if I plot volume profile from here to here. This will be a POC. Let's see. You see there. Here you have a low volume area, and we found resistance. We found seller interest. We found aggressive sellers here. Yeah, so basically market moved from balance to imbalance and vice versa, from balance to imbalance, imbalance to balance. They just move back and forth. The difference is just the price, higher price, lower price. That's it. So the price, this POC yellow line color. Okay, you can also shoot it to the future. Let's say here I want to shoot it to 1000. It will wait a minute. It will shot to the future. Okay, here we find a balance here. We have a balance over here. Okay, we have a balance. The market is balanced. Balance meaning buyers and sellers are willing to buy and sell at this price. This is where the volume is stable. Okay, where you can, let's say, where you know where in the currency exchanges, the counter. Okay, this is where the people are willing to transact the fair price, because there are enough liquidity right here. Okay, you become the liquidity right here. This is good if you are a banker. Okay, because there are people willing to buy and sell currencies, and the bankers are willing to take their order. And we, as a trader, retail trader, we just look for balance and imbalance, and we find the turning point by looking at the low liquidity volume node here, low node, looking at the imbalance candle. If the price, let's say, went up, right, and then on the way up, it had some bullish FVG, bullish imbalance candle, and then after that, shortly, it had a correction, and then the correction went as low as to the previous bullish FVG that we saw earlier. There, we can get the opportunity to long the market, to buy. Okay, just like what we had, I have shown you earlier. Here we have FVG, right? Again, we had FVG. Price went to from the high liquidity to the low liquidity, and there were buyers here. This is a discount area. Okay, discount. There are buyers interest to buy at this low price, and they were aggressive, and their aggressive caused the price to move high. Okay, and what else? Here, sometimes the swing is too long, so we just do it a little bit short. Yeah, we don't need to get all the volume profile from the very low. We could just get it from here. Yeah, here we have to know the story. Okay, every price movement, there is a story behind it. Okay, let's say from this swing low to this swing high. Okay. Let's say from this swing low. Price again grab the liquidity at the bottom here, and this is the balance area right here. Balance. And if we take a look at this here, the balance is right here. Okay, in this swing from high to low. Okay, notice the color changed from green to red. Okay, so this is where the price consolidated, balance, and then it becomes imbalance. Notice we have FVG. As I said earlier, the bearish FVG only appears when we have a red external swing low, swing high, and the price took the low liquidity of the previous swing here, right here, where there were this bullish FVG, but it doesn't show a bullish FVG here. Okay, it doesn't show bullish FVG here, but you can let me assure you here, this is where a low liquidity here. This is low liquidity, and also this is a liquidity grab. This move is a liquidity grab. Why? Let's drag the volume profile. Okay, here you see it's a liquidity grab. It grabbed the lowest from here. It grabbed the lowest here, the lowest liquidity here, liquidity node, the lowest volume profile node, and it broke high. Now let's go to 1 hour time frame. So what else does this indicator has? So I have shown you, I think, most of it already. Okay, you can setting the percentile of the value area 30%. Notice the value area becomes smaller, it shrinks. If I do let's say 20%, see, it becomes smaller. Let's go back to 70. Also, another feature is this. You can plot volume from this end just using a vertical line. Okay, you put VV. You put VV and it will show a volume profile. Okay, here. show a volume profile from this price, from this time until the end. Okay, it will plot the volume profile from wherever it is located. So if I put here, it will calculate all the volume profile from this time until this time, until today, until now, from wherever it is, and until now. I can go as far back as I can, as the chart could possibly do. Okay, here notice we are below the POC, so we are bearish here, and we are below the we are right below this low volume area, so this could be a support right here. Okay, no, there is no reaction. Let's go back a little bit further. Okay, this looks more interesting. We could have a support right here. Okay, because that is a high value node. If it broke above it, there's possibility that it might reach this, the low value nodes. Let's make it red. Okay. Also, let's do this from right to left. Plot it from right to left. Where is that? Right to left. Okay. Okay, it's much better. So we can know where we are. Okay. It disrespect the low value node. Okay, it found a resistance. This is probably a support, right? Support become resistance. Yeah. Yeah, support become resistance. It touches there. Support become resistance. Support. Yeah, support become resistance. Okay. Let's make it to default. Here you notice we have a frame, right? We can put a frame on the volume profile. Where is that frame? Here, hide volume window or border. Okay, you can change the width to 5. It will become thicker. It will be thicker. So if you are interested to buy this product, you can visit this. There. This is the product. It's $70. It's only for MKL MT5. Alright guys, I guess that's all for now. Thank you. Bye bye.